Hi everyone, welcome back to my channel. Today I'm going to review the positions in my Roth IRA account as of the 5th of May 2023. So in my Roth IRA account, I am working on this beat SPY strategy. Essentially, I have 100 shares of SPY and I'm trying to generate additional income of about 6 to 10% in the next 11 months by selling covered SPY calls. So the income so far is about 2%, actually a little over 2%. And I'm putting any leftover cash in the high dividend stocks like Starwood and Rhythm. That's not working that well. If I left them in cash, I would have been better off. But hopefully, both of them will pick up after the banking crisis is over. Here are the trades that I've done so far. So I bought 100 shares of SPY and sold one covered call on the 31st of January. And then I bought the call back and sold another one, and bought the call back, sold another one, etc., etc. And, on the 21st of April, we started a new position, and that's the call expiring on the 5th of May, meaning today, and the strike price was to 420. So last Friday, on the 28th, I received a dividend of $150.62. And I actually didn't have time to buy the shares on Friday. And then Monday, the market was kind of up. So I waited one more day. And on Tuesday, I was able to buy, 0.365 SPY shares for the same total at the price of 412. So actually, I've got pretty good price. That means pretty good number of shares. Last week on Friday, the SPY closed around 416, and since we had the 420 call, the strike price is about 1% away from the underlying, and so that's about 1% out of the money. And we know in such cases, it's better to hold for one more week. So that's exactly what I did. I didn't roll the position, I stayed. And how about today? So today, the 5th of May, Friday, I had no other choice. I had to roll, right? So I was actually looking at the market when SPY was around 412. It didn't look like it's going to go much higher. So I went ahead and rolled the position. So I rolled into the same strike price, and just 2 weeks later, the expiration is just 2 weeks later. And I was able to get the credit of 145. So which is pretty good. And as usual, I had a few dollars extra from rolling the call. So I bought, one share of Rhythm and 8 shares of Starwood. Both of them are pretty down because of the banking crisis, which should not affect these two stocks, but unfortunately, they are affected indirectly because people are selling all financial stocks. And they are sort of financial stocks, both of them. The trades that I made today closed the covered call expiring today and initiated a new position, sold covered call expiring on the 19th of May, so in 2 weeks, and bought 8 shares of Starwood and 1 share of Rhythm. And so there is pretty much no cash in my account again. And this is the way I like it. So these are the same trades that you saw already on the previous page. So I decided to rework the table a little bit to make it easier to see which trades were done together. So you can see, if the trade was done on the same day, the background has the same color. And also I added the information, how much credit I got each time I did the roll. So this one really technically is not a roll. I just initiated the position. But most of the time you can see when I roll, here was pretty nice. And these two were small, cash into my account, but at the same time, I wrote, every week, so very often. So this is not bad, but usually I get around $150 every couple of weeks, so that's actually very nice. Here, that's just the dividend, so there is no, I got $150 and I spent $150. So there is no leftover money from that. So today I closed the covered call and bought a new one. And the amount of money I got from that was $144. So as I said, the spread was $1.45 and minus some commission and things like that. So it came out to $144.28. So that's still pretty good. And these are my positions as of Friday's close. Still, I have a little bit more than 100 shares of SPY, right? That's the dividend. And I am short the one covered call. And you can kind of ignore the rest. It's not really relevant to our campaign. Okay, so how did the market behave last week? So last Friday, we closed, I think this is Friday, we closed around 416 right here. And you can see on Monday, the market went up and then down. And essentially, it sold off. I mean, I kind of expected it would sell off into the FOMC interest rate decision. Unfortunately, on Wednesday, that's when the FOMC decision was. This is Wednesday. The market was actually quite happy with the decision. Everything went up for a little bit, but then towards the end of the day, everything sold off. And Thursday was even worse. And today, things picked up. And I think it has something to do with, the banking crisis hopefully finally being resolved. Like the Rhythm and Starwood both went up, I think, over 4% on Friday, but they were pretty beaten down from the previous day. So it's not, still, I am below the price that I paid for them. But actually, the biggest reason why I have Starwood and Rhythm is for the dividend. And so on Friday, so here, this is the place where I initiated the trade, when I initiated the roll. If I waited just 20 more minutes, 30 more minutes, I could have gotten better price. I mean, the roll could have been, 165, maybe 20 cents more. So that means $20 more. No, not a big difference, but, it adds up. But of course, I cannot time the market, and I don't know that many people who actually can. So I'm pretty happy with the entry. I waited, looked like the market was going up, and here it seemed like it's pretty much done going up. But I guess I just wasn't patient enough, as usual. But still pretty good roll. I am, everything is working well for the campaign. Here, actually, you might ask the question, this is an interesting part, right? You might ask the question, hey, why did you wait all the way till Friday? Why didn't you roll earlier? And that's a very valid question. So, so last Friday, the SPY was within 1% of the strike price. So in such cases, we still had 1 week till expiration. So we know that most of the time value is still in the call, so it's better to wait till expiration, assuming SPY stays in this level, right? Monday kind of pretty much the same level, so there was no point selling. However, Tuesday it went down, and now here on Tuesday it's about 2% away from our strike price. So that actually fits the parameters for let's roll. And you can see, so Friday, Monday, I would have gotten, these are the spreads, like essentially how much money could I have gotten if I rolled on that day, right? So if I rolled on Friday, meaning here, right? So if I rolled on Friday, I would have gotten better price of about $2.03. Remember, I rolled for 145. But the roll would not fit the parameters of the campaign, namely 1% difference between the strike price and the price of the underlying. So that's close. That's too close for my comfort. I prefer to roll when the underlying is about 2% below the strike price. So Friday was not really an option. Monday, pretty much the same thing, not an option. Tuesday was an option. It would fit well into the parameters of the campaign, right? The underlying was 20%. I could have rolled into the same strike price and get 145 credit. And however, it was a day before the FOMC decision on the interest rate, and I really, there was lots of volatility in the market, and I didn't know what to expect, how the market is going to behave. If I knew the market is going down, of course I would have rolled, but I didn't. I actually expected the market to go up because everybody was waiting for the interest rate to be raised by just a quarter of point, and hopefully the Fed reserves are done raising interest rates. So all that was kind of suggesting that the markets would like it and will go up, but they didn't like it. It went down. But anyway, so Tuesday I could have rolled, but the price for the roll is 145, and that's exactly how much I get for my trade. So I don't feel too bad that I didn't roll on Tuesday. And then Wednesday already, this is about 407, let's say 408. So this is about 3%. So Wednesday, it didn't make sense to roll into 420. That's 3% away. I mean, it would make sense because I want to be cautious. I'm expecting the market to go up, but the premium I will get from the roll is relatively low. And Thursday, since the market went down or SPY went down even lower, the premium would be even less. And finally, this is Friday at the close. So, the timing, so the close was somewhere here, price is a little lower, so, and it's closer to the expiration. So anyway, so the roll, we would get only $1.38. So the timing of the roll was reasonably good. I'm pretty happy with that. Okay, so here, just to review the numbers in detail, as usual, I care about this yellow column. This is the profit from the calls plus the cash we get from each row. And you can see, so I had $1,100 in my account from the rolls, and then today I got another 145 from the roll. So total of cash from the rolls is about 1240, 1250. And so the profit so far from the covered calls is about 1100, and the total profit from both SPY, so the profit from SPY is here, and the total profit from both SPY and the covered calls is here. So you can see that we still, the profit from the covered calls is still more than the profit from SPY, but I'm suspecting that it will change soon. Here's in the graphical form. As you know, again, the yellow is the covered calls plus cash, and other than the few days or couple weeks at the beginning of February, the strategy has been pretty profitable and adding significant extra profit or extra income to my account. So here you can see this is the profit from SPY, from the calls. Here, this blue one, profit from SPY ETF itself, and this is combined. So we're doing really nicely. So I'm pretty happy. So plans for next week. I am really expecting the markets to go up from here. I may be wrong, but I really think that, the banking crisis is over. Hopefully there will be no more interest rates increases, and so the markets should be happy and just march forward and up. So covered calls are expiring in just 2 weeks. I'm expecting the market to go up. So either, to be safe, I would either need to raise the strike price of the calls because I don't want to get assigned, or I would need to shorten the time duration of the calls. So I decided to do the second. So the calls are expiring in just 2 weeks, even though I normally prefer to do 3 weeks. Actually, that's pretty optimal. But because of the risk in the market, I am going with just 2 weeks. And hopefully the market will go up, not all the way to 420. And then I can roll to a higher strike price and again, pocket some premium. So as usual, of course, I'm planning to monitor the position. Most likely, depending how the markets behave, next week I might not roll at all, or I might roll, to 1 week later expiration. It really depends how the market is behaving. So if it's out of the money a lot, or in the money a lot, I would roll next week. But if it's around at the money, plus minus 1% at the money, then I will hold and continue holding until the Friday 2 weeks from now. That's all for today. Thank you all for watching. If you like the presentation, please click the like button below, subscribe to my channel. There is more presentations coming up about how my account is doing, but also I'm planning to do more presentations in the Option School series, this time about covered calls and different ways of managing them. So that should be interesting. And so if you don't want to miss it, please subscribe to our channel, allow the notifications, etc., etc. So until next time, happy trading.